All right, let's get started. You can hear me okay, Tony?
Yes.
All right, good morning. Thank you all for joining us in our first homebuyer webinar of 2022. Welcome back to those who've joined us in previous webinars. If this is your first webinar, welcome to you as well. For the Palisades team, we have here this morning myself. My name is Al Rosario. I'm the operations director here at Palisades Credit Union. We have our presenter, Tony Lalla, who's our mortgage specialist. And we also have Ashley Cruz, marketing director. Joining us this morning as well, we have some friends to the room. We have Andrew and Kathleen Finn with R2M Realty here in Rockland County, New York. Andrew and Kathleen have spent the last 12 plus years helping folks in this community through the home buying process into their new home. So just so that it's fresh in your mind now, we'll put this information out in the chat area. But so it's fresh in your mind, their contact info, their email is finn@nyackrealtor.com. That's FINN at nyackrealtor.com. Again, I'll enter in the contact info in the chat area and I'll point out where you can locate that in a moment. But please reach out to them with any questions relating to finding and purchasing your new home. So now, before we get started, I do have one request, actually. So my request is please use the resources provided here today. Do not hesitate to reach out to us with any questions, regardless of which part of the home buying process, which step you're currently in. Reach out, ask questions, get as much information as possible. Really, home buying can be a complex process. It's our job to simplify that process for you. So I guess while we wait for some folks to maybe join in and into the presentation, let's get the housekeeping items out of the way. So to ensure clear communication and really to allow as much time as possible to share all the information we can this morning, incoming audio has been muted. We're going to pause in between segments. And at that point, Tony will answer the questions that you have and that you enter into the comment section. Please don't feel that you have to hold your questions until the end of the segment. On the right side of your screen, you'll find a question mark icon. I'll give you a second and locate that. It's going to be the fourth icon down on the right-hand side. So please use this icon to enter your questions as you think of them. So I'll give you a timeline of this morning. So there's 5 segments in total. Presentation will run anywhere from 30-40 minutes minus the questions. Depending on the questions we get this morning, you can probably add another 25-30 minutes to that. So approximately between 1 hour, maybe an hour 15 minutes is the timeline we're looking at for this morning. So that's what to expect for this morning. Now, after today, we'll email you a PDF version of the presentation along with a link to the video in case you'd like to rewatch it. Maybe there's someone that couldn't join us this morning and you can share it with them if they can benefit from the information. You can also download the PDF. If you're able to download the PDF today, the PDF is located on the right-hand side of your screen. Again, it's going to be right below the questions icon that we just located a minute ago. So it should look like a notepad. We'll also email you the questions entered here today along with the answers. So we would like to be considerate for everyone's time this morning. So if we do not get to your question today, one, Tony is available throughout the week via email, phone, or in person. His contact information is provided on the second to last page of the presentation. And 2, registrants, even if you couldn't join us here this morning, will receive an email with all the items I just mentioned. So you should expect that email somewhere in the next 7 to 10 business days after this presentation. So before turning it over to Tony, just for those that are unfamiliar with Palisades Credit Union, Tony, if you want to take us to the first slide, and I'll provide a little bit of a brief background. So I'll give you the short version. For over 75 years, Palisades has offered financial services to our community. And so what does that mean? That means we offer products and services such as savings accounts, rewards checking, low interest, rewards credit cards, personal loans, and of course, the reason that we're all here this morning, mortgages. We are a credit union, which means that we follow what's called the field of membership. So this means that as a credit union, Palisades can offer financial services to anyone who lives, works, studies, volunteers, or worships in Rockland or Bergen County. I think I hit all the points there. I always miss one. Lives, works, studies, volunteers, or worships in Rockland and Bergen County. If you're unsure if someone is eligible to become a member, please just call us, message us online. Don't hesitate to stop in. When you have a moment, you can check us out also at palisadesfcu.org. All right, so let's meet our speaker. We have Tony Lalla, who's our mortgage specialist here at Palisades Credit Union. Tony is joining us with 18 years in the banking industry, with 15 of those years focusing on mortgages. He's a lifelong resident of Bergen County, New Jersey, the real home of the Nets. I had to throw that in there, and comes from a household with financial background and really a commitment to helping those in the community. He's here this morning to share hopefully what becomes beneficial. I feel will be beneficial in your journey to finding and purchasing your new home. So with that said, Tony, I'll turn the wheel over to you.
All right. Thank you for everybody for joining. Good morning. Hope everybody's having a nice morning so far. I'm going to be discussing I'll be discussing 5 topics, and through each topic, we're going to do a break, as Al said, and answer any questions throughout the whole process. And if any of the questions that seem to be a little bit more extensive, then we could reach out by email, or you could call me. We can meet up. So let's get started, guys. So first is deciding to buy a home. Now, from this point on, you're going to look at some items. What type of house are you looking for? You're looking for a condo, you're looking for a townhouse, and you're looking for a one-family house or a multi-family house. The difference between each one is a condo is you own the 4 walls inside. You really have to answer to association board if you want to do anything. You don't really own the outside of the house. So the next level above that is a townhouse that you pretty much own inside, you own the outside, but it's still attached to the building. You still got to have more ownership, but you still have the board to answer to. And then from that point on, that you got a one-family house. That if everything is yours, there's nobody to answer to you and yourself and your loved ones. Then you have a multifamily, 2 to 4 family that you would like to have extra income and have an ability to, obviously you have to live with tenants at that point, but that you'll be the discretion to which type of house. Now, when you start thinking of buying a house, you got to figure out what is in your family, how many people, how many bedrooms, how many bathrooms. So it's very important to figure out, you have children, you have in-laws, maybe you're buying with friends, you still need a certain amount of bathrooms and bedrooms, and you don't want to be rushing in the morning and then you only have 1 bathroom and you got 4 bedrooms. It might not make any functional sense. You might want to need 2 bathrooms. The other thing is, you want to see if you're prepared to just move in. Ready to move in means that you turn that key, you have bought that house, nothing really has to be done. There's no renovations need to be done, or you're pretty handy, or you're willing to spend some of your hard-earned money to redo the kitchen, update the bathroom, do some flooring. Depends on your financial state at that point, and your willingness to see if you want to just move in and not do anything, or you're very innovative at that point. The age of the home, there's average age of the home is around like 56 years old. Some are 100 plus. It's all your discretion if what type of age of the home. Obviously, the ones that are earlier, in between like 1980 and above, it's going to be a higher ticket price. Square footage is important. You want to know what type of layout. So you have a one-family house or have a condo. Is an open concept. How big are each room that you are going to be? It's called living space. So you really want to know how much you could have 4 rooms, but there are 10 by 10 rooms. it's not that functional because it's not much room to go around. So you might have a 3-bedroom, then you got what, a 10 by 20 room, then you got 2 small rooms that might be working better for you. So you look at the square footage and decide where you want to go from that point on. So what we're going to talk about, these are the main components that you want to think of where you want to be. The community, you want to see what type of community that you possibly be living in. If you have children, you might, it's really important that school district to find out where the grades are, how it's ranked among other towns. No, there is crime. That there is, if you're looking for an urban area, or you're looking for suburbs, city life. I know I prefer, on a lower, like kind of quiet. It's more me. I'm more suburbs. Not a little more of a city guy. I used to be, but now I'm a little older. Just want to be more quiet type of neighborhood. There is, you always want to be mindful about looking at the properties in the flood zone. They might be subject to flood insurance, but everybody has their own way of looking at a house. But you might be right next to the water. It's so beautiful down the shore or near a lake. Just be mindful of type of different expenses that might come through it. Now, if there's a better school district, it kind of tends to, the tax is going to be higher in that, especially in Rockland County, Bergen County. They're pretty, average taxes is around like $1,000 a month. If you're in Rockland County and you're in Nanuet, or you're in New City, Pearl River, and that type of, or you got Northern Bergen County too. Okay. I hope everybody's doing good so far. Now, finding a couple payment structure and also finding a type of home. I discussed about the type of home. Down payment, what we do is there's conventional down payment of 5%. So 5% of, say if you're buying a house for $500,000, that's $25,000 just for the down payment. If it's a $300,000 house, now you have $15,000 and the loan amount of $285,000. But then you need additional additional money for the closing cost. It really runs between $10,000 to $15,000 from that point. Also, we need to source the down payment. Is it coming from your checking account? Is it coming from a retirement account? Is it coming from maybe you have a gift for equity that somebody, your friend, family is giving you money towards down payment. So at this point, I would like to take some questions, take a break, and then you can hit it off, Al, to see where we go from the answer some questions right now.
All right, thanks, Tony. Yeah, some great information there. Yeah, definitely types of home to look for. These are all things that I looked at back in 2019, where I purchased my first home. And type of home, number of bedrooms, and number of bathrooms, a lot more important than I think some folks may give credit to. Move-in ready versus updates needed. So really great points. I'll send it over to Ashley, who's going to take a look at our incoming questions and read those off for you.
Thanks, Al, and great job so far, Tony. Some great information, but as of right now, we don't have any questions that have come in.
All right, I'll kick us off a little bit, Tony, and see if maybe we get some folks maybe think some questions along the way. And again, there are 5 segments in total. So even if in the next segment you think of a question or something we went over in the first part, definitely feel free to enter those in. Tony, you talked a little bit about the down payment. Now, is there a standard down payment that a buyer should be looking for? What's typically the industry standard on a down payment? And I think that there's programs that maybe could changed what the down payment should be, but in a regular conventional loan, what are we looking at?
So 5% in a conventional loan. And now, just to go a little bit more about down payment, there's a private mortgage insurance called PMI. That is equal to 20%. It's pretty hard to get to that number. Like, give you an example. If it's a $500,000 home, that's $100,000 plus you got to do closing costs. Most borrowers are not able to get to that level, or they don't want to put all their money into one house to avoid PMI. It's just a percentage that is between. So if you're putting down 5%, that's the minimum for a conventional mortgage. Now 15% of it is going to be insured by a private mortgage insurance company because you don't have 20%. The only way to avoid it is you put 20% down.
All right, yeah, thank you. Yeah, great information. I know that was something that we definitely discussed, you and I, when I was looking for a home. So I think it's something, again, it really just comes down to budgeting is what it sounds like you're saying, and what's in your budget and what that means for what type of mortgage you're gonna fit into. Check in on Ashley. Anything coming in yet, Ashley?
Nope.
Okay.
No, sorry, we haven't gotten anything yet.
All right, thank you. Yeah, if you want to kick off into the second topic, Tony, you can go away. Thank you.
Okay, qualifying for a mortgage. So there's certain qualifications that under underwriting, doing a mortgage, it's very important to look at your credit. You have a little scale here, and there's factors that your income, you have your credit, plus you have debt to income ratio. I'll explain that a little later, that it tells you how much you owe per month versus what your income is. So as it says fair between 580 to 699. That's a large scale, but as for our credit union, as a Palisades credit union, our bottom line is 620. Other financial institutions might be at 650. Some might be a little lower. But when it comes down to having that credit, the higher you are, the better interest rate that you're going to get and the better terms. Also, if you don't have the 20% down, the lower your credit score, then your PMI costs will be higher. So I recommend everybody to be very mindful of their credit, be consistent, make your current make payments on time, have multiple sources of credit cards, loans. If you're not having credit cards and loans, it actually hurts you because there's no credit history. As long as that you're actually paying on time and having a long track record that actually you're making the payments on time. Now, a negative on your credit is you are missing payments, you have a large amount of outstanding debt, collections and might have a foreclosure or just new debt that is just impacting your credit, because your overall credit is a main factor of getting not just a mortgage, car loan, personal loan, even forget about even buying a house, even getting a rental. Just go to, they're going to run your credit to see how creditworthy are you. So qualifying for a mortgage, you really need to do your homework. Always compare rates. Go out on different websites, see the national and the average. Go into our Palisades, go to any other credit union or bank. Ask your friends and family. See what they suggest. Do your own research on the company that you are looking for, and look at their reputation. See how good are they going and what's their status. It's a big thing that, because this is a major purchase in your life, you want to have a finance institution handle it the best way possible. Also look at lenders' programs. There might be particular programs that fit your needs. So qualify for a mortgage, obtaining a pre-approval. So you're coming out, you're working with me. I'm a mortgage loan officer. I will work with you every step at a time to complete your application, gather the information that I will request for your financial information. Once I'm going to go that, in the next slide, it will be a little more detail on what we need to obtain a pre-approval letter, and then submit the final package, review your income, down payment, and this will give us a range, a price range to provide to your realtor, and then you can start shopping. Most realtors out there, they really want the buyers to have a pre-qualification letter because they don't want to just keep on showing houses to anybody as a window shopper that never wants to buy and maybe not even qualified to buy. It just gives them more security. And you're giving the realtor and also the buyer yourself, you're giving the confidence into the seller that you mean business, you have the pre-qualification letter. Okay, so if you're a standard W-2 person that you typically, we need, there's different categories. So you need 2 years of recent W-2s. The federal tax returns, we need 2 years of tax returns. Just give you an example, this is 2022. Say you came around April, just before the taxes are due. We don't expect you to have that taxes done, but you would have 2020 and 2019 tax returns available at that time. If you have it, 2020 and 2021, that's great, as long as it's the last 2 years. When you show that you have enough for a down payment, we need to show the assets. So your bank statements will be requested, 2 months explaining any large deposits and showing the amount of money that could cover your down payment and closing costs. We need 1 month of recent pay stubs. So you might be to get paid weekly, bi-weekly, semi-monthly. So it's either 4 paychecks or 2 paychecks, as long as it equals 1 month. If you are self-employed, you have your own business, we need 2 years of tax returns, business tax returns recent, and K1s, if they're familiar with whoever has their own business, and a profit and loss statement for the last 6 months. If you're retired, you would need your Social Security, pension reward letter, if you're retired. So every year, Social Security gives you a letter of your benefit. So we need that copy. It's like almost kind of acts like it's your paycheck. And the same thing when you retire from your work, you got a pension reward letter showing your benefits. We need that original pension reward letter, so that shows you that is your money that you're promised for retirement. If it's a refinance, we would ask for all this information, plus we would need your mortgage statement if you do have a mortgage, or you're looking, or we need the taxes of the property and your homeowner's insurance policy to do a refinance. Okay, now this ends this segment of qualify for a mortgage. I'll kick it off for any questions, and Ashley would be able to read them off so I could help.
Yeah, thanks, Tony. Thank you for that information. Great info. I believe we do have some questions. I'll give Ashley a couple of moments. But yeah, great points. I think some of the things you definitely hit the nail on the head with is really having multiple sources of credit, but maintaining the low to no balances, and of course consistent and on-time payments. You know, that's really the key here. Going over some of the realtor stuff, I think we have some questions coming in. So Ashley, you wanna read them off to Tony?
Yes, thank you. So Tony, we have a couple questions around the pre-approval process. First, If someone receives a pre-approval, how long is that valid for?
For 90 days. So 3 months, but it doesn't mean that it just expires, but we just have to rerun. If you come back, the borrower comes back, hey, I want you to reestablish this pre-approval. It's either we reestablish the previous one, or we could do an increase or any changes at that time. We just got to rerun credit.
Okay, so that was the next question. As part of that, if a hard credit check was performed at each pre-approval.
Yes, there is a hard credit check from all 3 bureaus.
Okay, excellent. I think that wraps up our pre-approval questions. Thanks, Tony.
No problem. Okay, so we're gonna go for the next. Oh, Al, you have anything else?
No, I think you covered everything, and great questions. Definitely a pre-approval process. That was definitely something that if someone didn't ask, I wanted you to elaborate on. So yeah, 90 days. Great info. I'm trying to see if there's anything else that maybe you covered that may be beneficial. But I think you're gonna go over those in the next 2 or 3 slides. So we can continue. Thank you.
Thanks. So the home buying process. So this is the terminology that we have. The consultation. That's you dealing with me, your loan officer, or you called mortgage loan officer, or mortgage loan originator, or MLO, or you just call me Tony. So we have the consultation is to figure out what type of mortgage, what type of house, and figure out what the best payment structure the borrower will need. So that's the consultation. The application is providing documentations and filling out an application that I will help guide you through and be at every step of the way for the application process. Once that I collected all the financial documents that were mentioned before, plus the application, and I will gather that information, put in a system and process it, complete it, submit all the documents, and then it goes to underwriting. I'm not the underwriter, but I do have pretty substantial knowledge that I can see if something's going to go, but I'm not the final answer. The underwriters will evaluate the loan itself. Once it gets approved, then you get the initial disclosures. That means you're going to get provided a DocuSign through the email disclosing all the information about a mortgage, everything that you could think of, and also the loan estimate. I'll tell you where you are. This is a commitment that we're moving forward. Not a commitment letter yet, but it's telling you that it gives you an option to see if you would like to go with us and attempt to proceed. It means that you're signing off on it and you're completing the documentation. And once that's completed, then we can continue with the rest of the process. And then we gather up some ink signed documents that need to be handwritten. From that point on, then we ask for an appraisal cost to go forward and then appraise the property. And then the process keeps on going from there. The commitment letter will be issued to you. From that point on, once the appraisal comes back, then we order title work, we order other vendor work, and we do a closing disclosures that will give you the final numbers. And after that, you have signing day and then your funding day. What is the advantages for a Palisades for a credit union? So we do have low rates of 15-year, and a 20-year, and a 30-year. We have competitive closing costs. You got me. I just said step-by-step experience. I am going to be your personal banker. I'm going to be your mortgage loan officer that will give you the confidence. I know I've been done this for about 15 years, been banking for 18 years. I have the patience, the knowledge to go through the process with anybody that knows nothing about mortgages or houses to somebody that knows about houses. I want to feel comfortable and confident that the buying process is going to be smooth when you go with Palisades and with the Tony guy. So this next subject is the Home Buyer Dream Program that is from the Federal Home Loan Bank of New York. This is a program that gives you $10,000 towards the down payment and closing costs assistance to be eligible for a first-time home buyer purchasing a home. It's a more involved program that if anybody would like to talk about it, I will have time to talk over the phone. There's some qualifications and certain income-driven requirements at that point on, and then I'll explain it in more detail. But there is a nice opportunity to do it, and we are okay for this segment. Ashley, kick it off.
Yeah, thanks, Tony. Yeah, I'll throw it over to Ashley, see if any questions have come in.
No, Tony, you seem to cover everyone's questions in that section. We don't have any additional.
Okay.
That means you're doing a great job, Tony. The one thing I will add is I mean, it's a lot of information. You're sharing a lot of good points. Again, to everybody viewing, the PDF will be emailed to you. Please look that over. Anything that doesn't look clear or you just have questions on, the best thing you can do is use your resources. We don't expect you to become experts overnight. Some of the stuff you may know already, some stuff may be new to you. Best thing you could do is call your realtor, call your whoever your actual team is, meaning your real estate attorney. Call Tony for any mortgage information. Use those resources. All right, thanks, Tony. All yours.
Okay. Okay, now know before you go. Okay, do's and do nots. Do's, I'm sorry. See, I wanted to say that do's and don'ts of home buying. And I was gonna probably pick on me because I keep on messing up that title. So review, there's an annual report. The government have put in place an opportunity to you guys know your credit. And it's only one credit score, but at least you have an opportunity to get a free one. A lot of sites, if you go to each one, you got to pay a certain dollar amount. I would recommend everybody go to www.annualcreditreport.com, review your credit, see where you stand. Even you could try Credit Karma. It's kind of, they have certain models that kind of match up, but I won't guarantee the whole thing, but it gives you a good snapshot of what type of credit that you have. And also credit cards have those generated systems that might give you a credit FICO score. I would recommend doing that. Plan for a down payment. Save up. Be prepared for a down payment. But you might be able to have an opportunity to go get gift funds from your family or friends, but these funds need to be liquidated 7 days before closing, before the settlement date. Stay organized. Keep on with your financials. Track all your large deposits. Make sure you're going through the process and you are paying your credit cards, you're paying your auto loans, you're paying your rent on top. Just keep your payments structured and be consistent and stay organized. Contact me anytime you want to do anything with any changes to your credit, even paying off your debt. Okay, don'ts. So you have, try not to apply for new loans. You are trying to buy a house. So if you want to buy a car in that time period, that might throw off your numbers. So it's encouraged not to increase your credit card debt, increase any debt or personal loans, credit cards, all on the loans. Please just don't apply for anything for the interim of buying a house. Transfer, don't increase, do balance transfers. Don't leave your financial institution. That's just going to cause delays. Employment is very important. You don't want to leave try to avoid any changes in employment or income. All right, this is mortgage lingo. I'm going to go through each one. There's going to be some definitions on the next slide. I don't expect everybody to understand the definitions, but I'll put it a little bit more understandable, more real life. The amortization is you're doing your payment is your interest and your principal. It's going to be reduced over a course of time. It could be 15, 20, or 30 years. And this will show you a schedule of payments until the last month of the year that you're taking away from the principal and you're eating away from the interest. The annual percentage rate is it's a rate that is combined with your expenses and other fees that present what the cost of getting this loan, the yearly costs. Appraisal is when I mentioned before, there is every house, or it could be refinance or purchase, we need to have an appraisal done that will evaluate the loan to value, means how much you put in down and how much the real value is. And that typically costs us $500. The closing cost is, generally speaking, the average is between 10 to 15,000 and an additional to your down payment of 5% or more. This covers your attorney fees, your appraisal fees, this processing, underwriting, surveys, settlement charges, title insurance, title work. There's a lot involved in it, and that's why that's a higher dollar amount when you purchase a home. Credit score, like I mentioned before, credit score is very important. It's your credit worthiness. It's a number that represents how responsible repayment you are. And when you repay something, it's a reflection of you. Deed is a legal document that transfers ownership to another. So that seller is going to transfer the deed to the buyer, and that'll be you. Down payment, I was discussed before. Down payment is it's a percentage towards a home that you're not borrowing, and if it's 300,000, your loan amount is 285. The down payment is 15,000. That's not the closing cost. That's just the extra. That's the down payment of 5%, or you could do more. Earnest money is when you go and do your you put an offer in the house. You already have a pre-qualification. You put an offer, and now you have a contract that you have to sign between the seller and the buyer. They might ask for earnest money. That means that you're making a good faith to 5,000, 10,000, that I'm not going to back out of this deal. I mean business. I'm going to put some money towards my offer to sound better than just signing a piece of document. At least that you're almost forfeiting the money because you want that house. So it will be sitting in an escrow account in the real estate office, and if the seller backs out, you'll get that money back. But if you back out at the last minute and there's no issues, that you might be subject to lose that money. Equity is the difference between what the loan amount is and your mortgage amount and what the house is worth. If you got a $500,000 house and you put $100,000 down, that's 20%. You have 20% equity. That's money that the house is worth, but that's money that it's not the loan amount. The loan amount is 400, but you have 100,000 equals 20% equity of the property. Okay, the loan estimate is it's a written document that will be sent out to you. It's it's a first step before you get your closing disclosure. This is just an estimate to obtain the closing cost and what your monthly payment monthly payment. Loan to value, I mentioned this before, is a percentage of the market value and what is borrowed. So your loan to value, if you're at a $300,000 house and you put 5% down, your loan to value is 95% because your loan is 285 and the house is worth 300,000. So loan to value is 95. And the other one would be 500,000 and you put 20% down, your loan to value is 80%. Private mortgage insurance, I have mentioned before, when you don't, the minimum is 5% down. The other 15% that most borrowers don't have because they it's not easy to come across, a large amount of money like that. But if you do, great. You avoid the PMI and the extra costs. But the private mortgage insurance it protects the lender for defaults, and this will be an extra cost provided by a different company to evaluate how much would be. Give you an example. If you're looking at a $300,000 house and you got 15%, 15% that you need to be covered because you put 5% down, and you have a credit score of maybe like it's pretty favorable in the high 700s, you might be paying out roughly about $80. But when it comes down to have a credit score, you might that $80 might double or triple the expense because you are a more riskier borrower, and that's why the PMI cost goes up. So we have a sales contract. When you put an offer in and it gets accepted, the sales contract, it will be an executed sales contract between two parties, the seller and the buyer, and it will be signed off and it will be executed that this you agreed, and we're going to go into an attorney review, and then the attorneys will review the documents and proceed from there. The real estate attorney is you need somebody, you could choose that your real estate attorney, and it will conduct the settlement, the end home process, be responsible for any legal aspect of the transaction, title, and recording of the deed. The term is, we have, with Palisades, we have a 30, a 20, or a 15-year payback. So that's 15-year amortization, or it could be 20 or 30-year amortization. The higher you get 30 years, it's easier payments. If you're able to pay more in less time, that's great. You could do a 15-year fix, or you could pretty much dump a couple extra payments towards the principal every single year if you can. And if you have a 30-year fix, you're going to cut off some years. You might cut off about 5 to 6 years because you put an extra payment towards the principal every single year of the next 25, 26 years. So you could control your own way, and there's no prepayment penalty. There's when you get the mortgage, you're getting the mortgage, and you could pay it off. You could put money down, but your payment structure will not change. The loan amount will change. It will go down, but your payment structure won't change unless you do a refinance. Then your payment structure will change, but obviously that will cost you extra money. Then we have title, that will be an official document of ownership that will list you and whoever else you'd like to have on your deed. That will be on your title. Title insurance is pretty, I would recommend it. It goes for the lender. There's lender's title insurance, and there's also homeowners and title insurance. It protects the lender and also protects the home buyer. This document will, just God forbid there's any errors and omissions, something that somebody missed something, and then, well, there's some heirs that own this property. It wasn't done properly. It wasn't sold properly. And now you're subject to some legal action. It's good to have title insurance. The underwriting process is, once it leaves my hands, the underwriters do their due diligence and go through your financials to qualify you on your financial status and your credit worthiness. Okay, now we're going to take a break. We're going to answer some questions. Al, Ashley, kick it off.
All right, thanks, Tony. Yeah, definitely mortgage lingo, some of the terms that you went over, specific terms that a buyer slash borrower may hear throughout the home buying process. I mean, chances are these items are going to be just in the background, really things that your team will take the heavy lifting on. But, of course, Tony wants to make sure, and we want to make sure that you're best equipped. So if you do hear these terms, you have some type of background and kind of already have an idea of what some of these terms are. I think one of the key points that I'll highlight is the do's and don'ts. And really, the main thing to take out of that section is really check with your mortgage lender before any new financial decisions. As small as it may seem, it could be as simple as transferring large deposits from one account to another, even if your name is on both accounts. So any financial moves, any decisions you're about to make, please just check with the mortgage lender and make sure that it doesn't affect the mortgage in any way. And if it does, what that means for you. It may mean nothing. It may mean just one extra step, but having that conversation is always going to be key. Ashley, you have any questions for us?
Yes, Tony, we do have one question.
Sure.
If a home buyer would like to put their children on the deed, is that possible if just the one person is going to be responsible for the mortgage?
Yes, you can put you could put it on the title. So if you want to put your children on the title, that's your discretion.
Okay, excellent. Thank you.
No problem. Okay, so I'm gonna go forward and go to the next. So the closing process. Oh, finally we're at the closing process. This is gonna be fun. Time is of the essence. So you want to be you want to be in control, and you don't want to have any delays. So you would want to keep communication open at all times with your mortgage loan officer, also your settlement agent, your realtor. You gotta make sure that we're all on the same page and you're all communicating. And if there's any information that is requested, you got to get it on a timely manner so to avoid any time issues. So you do have a choice to for some providers, you have a choice to pick your own attorney. This is for house buying, and for most inspectors, the home inspection, it could be other inspections that any pertain to that particular house. You could pick the vendors, except the only thing that is the appraisal that we would order the appraisal with our appraisal network. Talk to your team, like I just mentioned before. Always talk to your team. Constantly be very mindful of the communications and making sure if you have any questions considering the providers or fees, feel free to give us a call and we'll discuss everything. Protecting your identity and then protecting your information. Sending emails, we do, Palisades do provide a secured email system. It's called Barracuda. And this is, you create an account and you can log in and you could send your financials. I could send you information that is, it shouldn't be public knowledge. So that will be added protection for your security. We recommend not to send emails of your financials and your private information, your social security number, just through the email with not being secured. I have mentioned this before, there's the loan estimate. This is an important document that will be provided throughout the whole process with us. So this might change over time. It might be a certain circumstances you're asking for more money, or you're looking to maybe put less. This loan LE can change multiple times throughout the process. But there will be one last LE, it's loan estimate. Then there will be a CD, it's called closing disclosure, will be provided a day afterwards with the final numbers that you would discuss with your family and your attorney to make sure that everything lines up correctly. Preparing to close, preparing for closing. So 10 to 14 days to make sure that we are all scheduled, communicate with your lender, your real estate agent, your settlement professional, and it's important. A lot of borrowers get confused when I ask for the, or they don't understand it properly, that you need an insurance policy. So the insurance policy, you're calling Allstate, Geico, Prudential, whoever you have, you're calling them for a future policy. Means that you're going to call, I'm buying this house. You're not paying on this policy at all. You're gonna, I think we're gonna close sometime July 15th. So the effective date is July 15th. That could be always modified, but at least we know how much your insurance is, and you will have insurance the day of purchase. So that's very important. It's not a quote. It's an actual policy that would be in effect in a future date. I mentioned this is the closing disclosure. This will be the final numbers. Once this is sent to you directly, we will, there is no other changes. And the next slide would be, if you're getting it by email, it'll be delivered and you'll have 3 days to wait. Means it's a 3-day rescission period. You might change your mind, or there might be a situation that you can't do this. This gives you an opportunity to review the documents, review what you're signing up for, and being confident that you're going to closing. If you're doing it by mail, we will mail 7 days in advance, and you can review the documents by paper. We advise you to use your if you have a financial advisor, you have any clarifications, use your agent. Also, your attorney will really review these documents and making sure everything lines up with what you agreed to and your terms and conditions on loan. I have one of the terminologies I mentioned before is lenders title insurance, and then you got the owner's title insurance. This protects the bank for any legal action that there's any errors on recording the title. And the next slide over here is your own owner's title insurance. It's highly recommended. You don't want to be coming across, and there's some hidden things that, because of errors or omissions, indeed, and fraudulery that was done in the past, it was never caught, and then it became an issue down the road. This protects you, and it's a one flat fee. It's not as much as you think. It's worth it, and you're protected going forward. So this concludes this section. So let's, and this is the last section of our presentation. Let's open up from questions. And Ashley.
Hey, thank you so much, Tony. Thank you everyone so far for your questions. I'll send it over to, I do have some items that I probably wanna touch on, but I'll send it over to Ashley. I'm not sure if there's any questions in the chat area there.
Thanks, Al. Thanks, Tony. No, we haven't received any additional questions at this point.
Okay. Al, you're gonna give us some additional items, or?
No, I don't have any additional items. If you have anything else you want to add, if not, then I'll call and maybe something will come up in between me closing us out for the day.
Yes, I just want to say thank you very much for everybody to participate, or if you couldn't make it, then you'll be able to see it after the fact. I'll be very excited to work with anybody that is interested to, is now that just want basic information or just a little bit more guidance is to get them to the future, could be a year or 5 years down the road, to get you to the right path of what you need to do and what you're looking for. And I'll be gladly to help everybody. And thank you for your time. And enjoy the rest of the weekend, and be safe, everybody.
All right, yeah, that concludes our presentation. You're all officially experts and ready to buy. I'm joking, of course. You're gonna come across scenarios. You're gonna have questions along the way. So I'm gonna keep repeating this. Call Tony, contact your realtor. R2M is a great source. One thing I learned quickly searching for my home is do not underestimate the importance of working with a realtor that understands the area that you're looking to buy in. Again, use the resources available to you. This is a long-term investment. Information is going to be an essential part of the process. So just thank you to Ashley for moderating our questions this morning. Thank you to Tony for your insight on mortgage and the home buying process overall. Thank you for everyone that joined this morning. Hopefully you found the information we shared here today beneficial. You'll get an email, like I said, 7-10 business days from today with a link to the presentation. Please share that information with anyone that wasn't able to join, or even just in the future, someone that may need the information. Feel free to share that. If we didn't get to your question today, which I think we got to all the questions, but definitely reach out to Tony directly so he can go over your unique needs. Everyone has their own specific needs and scenarios. And again, 7-10 business days, you get a PDF, you'll get the link to the presentation, the Q&As from this morning. And just another shout out to Andrew and Kathleen Finn. I entered in their information into the question and the chat section. Hopefully you were able to find that. We'll also include that in the email as well. But definitely reach out to them, give them a call, shoot them an email. We're here to help.
Great. Thank you so much, Al. Thank you so much, Tony. Tony, we did get one comment saying thank you so much for the information. It's been very helpful. And we do have one final question. Obviously, searching for a home, looking for the home that you're looking to purchase may take some time. But let's say once you find the home you're looking for, how long is the average time period from when you, find that home you want to when you are at the closing table and funding that loan?
So once you have the pre-qualification letter, and then you're going out there and you find something, and the seller is willing to sign to execute a sales contract, from that point on, once you have that document, it's between 5 to 6 weeks to move to pretty much be at the closing table.
All right, excellent. Looks like we have no other questions. Thank you again to Tony and Al and to everyone joining us today. And I wish everyone a great weekend.
Have a great weekend, everybody.
Bye-bye.
Thank you.